The Hindenburg vs Adani'saga has proved to be a blessing in disguise as it tested the overall resilience of the Indian markets, and the results couldn't have been better. The expert panel set up by the Supreme Court has significantly highlighted the strength in terms of both the breadth and depth of the Indian market. The way Indian stock markets came out unscathed amidst such tumultuous events that had sent shockwaves across the globe has increased the confidence of global investors manifold. Indian markets, investors, traders, and most importantly the authorities handled this episode with great maturity as well as transparency in a time-bound manner. In this context, it is important to have a detailed look at this expert committee's report as it shows why the Indian stock market continues to be one of the most attractive destinations for not only domestic investors but also the rest of the world. But before we go ahead, let's have a look at the chain of events from the beginning. On the 24th of January 2023, Hindenburg Research published a sensational report titled, Adani Group, How the World's Third Richest Man is Pulling the Largest Con in Corporate History. This led to a major fall in the share prices of Adani Group's companies, and the Indian stock market indices dipped sharply, indicating a potential crash. The report was used by the main opposition Congress party to mount an attack on the ruling party at the center. Congress has been targeting the Adani Group for quite some time. A few writ petitions were also filed as public interest litigation in the Supreme Court of India. In the course of dealing with the petitions, the Supreme Court issued an order on the 2nd of March 2023. The Apex Court directed the Securities and Exchange Board of India, SEBI, to investigate the following aspects and to file a status report within 2 months. Whether there has been a violation of Rule 19A of the Securities Contracts Regulation, Rules 1957, SCRR. Whether there has been a failure to disclose transactions with related parties and other relevant information which concerns related parties to SEBI, in accordance with law, and whether there was any manipulation of stock prices in contravention of existing laws. The Supreme Court also constituted an expert committee, and SEBI was directed to keep this committee apprised about its investigations. The committee was headed by retired Justice Abhay Manohar Sapre. The other members were retired Justice J.P. Devidhar, K.V. Kamath, O.P. Bhatt, Nandan Nilekani, and Somashekar Sundarshan. The Supreme Court of India constituted the committee with an order dated March 2, 2023, and the report was submitted on the 6th of May 2023. The expert committee interacted with several government agencies and private individuals and entities in addition to SEBI and submitted its report on the 6th of May 2023. The report said that the committee has not found any price manipulation by the Adani Group and there is no pattern of any artificial trading. According to the report, SEBI has found out some entities had taken short positions prior to the Hindenburg report and profited after the price crashed upon the publication of the report on the 24th of January. These entities are under now investigation. Paragraph 55d at page 110 and page 111 of this report says, the Enforcement Directorate has found intelligence about potentially violative and concerted selling by specific parties just ahead of the publication of the Hindenburg report, and this may lead to credible charges of concerted destabilization of the Indian markets, and SEBI ought to be probing such actions under securities laws. The report observed suspicious trading by some entities. Of this, 4 are foreign portfolio investor, 1 body corporate, and 1 individual. The names of these entities are not provided. There is no adverse observation with respect to Adani scripts in the cash segment. Also, there is no finding of any regulatory failure. Stay tuned for more updates.